presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will. But I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Make it a great night, folks. I'm telling you, this is a great card. That whole think about and bring about, folks, it's real, man. You just do it, man. You are what you believe you are. Humans are powerful magicians. You have the power to make yourself what you are right now. But it's not your reasoning mind that controls your power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials down 70, up 77. NASDAQ up 98. S&P's up 18. Gold contract up $3.50, trading at $18.01 an ounce. We have silver up 34 cents, trading at a price point of $23.27. Oil down 38 cents, $71.62 a barrel. Notes and bonds. The 10-year note trading down 23 ticks, 114.13. The 30-year down 21 at 131 flat. King dollar's down to 321 ticks, trading out at 104.779. Euros at 105. Yen is at 136, and the British pound is at 122 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we have ABC structures. It's setting up a potential ABC structure down on the daily. We have an ABC down on the monthly. So, the bottom line, here you go, man. The bottom line, we come down hard. You come down with 77 million shares. You're going up with 42 million here. That doesn't fly. And what's also happening on top of that is it doesn't look like you're going to hold the highs of yesterday, which is just more bearish. That's the bottom line. Now, if you set up the ABC down, you got the A point on this is 410. The B point is 390. So you get 391. You get 19 points. If the C point is today, we're dealing with 97, 87, 70, 78. 378. The gap is 381. We're going to the gap, man. The gap's game. That gap is game. NDX 100, same type of setup inside the NDX. What do you have with the NDX? 3 Qs. 3 Qs right now. Bottom line, you're up. Now, the difference in this is bottom line, we down with 53 million. You're up today with 33. Now, the difference, the 3 Qs has held over the high of yesterday. Now, we'll see if that shakes out into close, but we'll see. It's 282.57. So now what's going on, which is really wild, is that you actually have the Qs are actually a little bit stronger than the S&P right now. We'll see where it shakes out, but it is what it is. Gold contract. I don't like what's happening here, folks. And this has been holding up, man. I mean, in a big way, but when you go up on 108,000 contracts, not cool. Let me see what we did yesterday. Yeah, yesterday you did 156,000 contracts. Today we're at 108. The high of yesterday was 1803.20. We went to 1806. You're at 1801. That's not a good scene, man. That's just not a good scene. So, when we put all of this together, basically, that's saying to me, somehow, some way, this dollar is going to go to higher price. That's what it comes down to. We take a look at the dollar. The dollar's, cooperating today, and the dollar's down 319 ticks. And, if we go back to the S&P, let's just look at this for a second because we'll go intraday. The S&P had got all the way up to the price point of 39.77. Okay, so you've given up 18 points in the S&P. And let's see what we have here. So, yeah, you get a high volume low. That high volume low is laying out there from 2 o'clock this afternoon. It's going to go after that high volume low. That high volume low is 10 points lower than where we are right now. So, not a great setup. If we take a look at some of the higher volume equities out here, because it's going to be a low volume market out here today. You have Tesla is down 54 cents. You got Amazon up $1.95. Nvidia's up $8.95. That's got some action underneath it. That's probably putting the juice into the NDX 100. You have, in fact, let's go look at that. So we look at the NDX 100. What's moving this NDX? So you got Datadog, that's up 9%. You got Pinduoduo up 5%, and Nvidia up 5.5. Taken away from it, T-Mobile's down 2.6. You got Palo Alto down 1.9, and you got Activision off 1.3. So the bottom line is that, there's challenges out here, man. My take is that the Grinch is going to be here instead of Santa Claus. That's what this looks like. Let's go take a look at an Eco-Eagle for a couple of the tigers out here. That's AEM and an Eco-Eagle right now. So let's see. So the low for an Eco-Eagle is 36 for the year. The high is 67. Next time they come out with the numbers is February 24th. Okay, so last week you had a nice high at 52.54, and we did that with 4.9 million. Yeah, and you get, let's see this, look at this, man. You get 4.9 million, and it made a high, and today we tested that high, 1.5 million, and yeah, it's not even close. Let me put this on a weekly. Listen, man, in the gold market right now, to me, the broad market is pretty cut and dry, meaning that this wants ABC structure down. The gold equities, they had a huge run. I mean, if you look at AEM, in the matter of 8 weeks, we just went from 39, to 55. But I'd say that, yeah, I mean, if you own that right now, I'd take bread off the table, man. If I'm wrong, yeah, it's a bummer and the thing goes higher, but my take right now is that these gold equities, they've been holding up. This is what I was talking about yesterday, too. They're holding up. But when they don't hold up, which there's too many of them that have got at highs, and they just can't get higher, and there's low volume up there, and they're pulling back. So a natural retracement is a 0.38 retracement after you've had such an expansion. Because if you've been in this market, if you've been in the gold market, I mean, it was huge. This last run was huge, man. I mean, it's been laying flat for 3 or 4 weeks. But if you caught the run up, and plenty of us did, I mean, it was a monster freaking move. So we'll see where it shakes out. But my take was that you better be really careful and, put stops in, man. Dow Industrials right now, up 105, NASDAQ up 110, S&P's up 22. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 114. NASDAQ is up 114. S&Ps are up 23. Let's go to our man Jose in Lakeland. Jose, what's going on, brother?
Hey, you're welcome. Yeah, you're welcome. Yeah, sorry about that, Tom. I was just handing a finner out the window to a homeless lady.
That's
there
a
seems to
beautiful
be
day.
a lot of homeless ladies out there. I don't know if it's a recession.
Well, I'm glad you're taking care of them, man. Totally.
Yeah, wow. On the same vein, though, if you date a homeless lady at the end of the evening, when the evening comes to an end, you can just leave them there. But
You're wicked, man.
anyway,
Yeah,
hey,
wicked.
Tom, M1 Money Supply.
Yeah.
It's all the cash, am I correct? All the cash plus private checking deposits in the country?
That would be correct. So what happens, folks, is that, and this is, what happens is that years ago, folks, that's, traders, I used to trade bonds all the time, okay? I still trade doing bonds. But when we were trading them, we would always look at the money supply because you have the M1, M2, and M3. And as Jose just said, M1 is, bottom line, is that's the currency, that's demand deposits, liquid deposits that can be turned into cash immediately. Yeah.
Okay. Okay, liquid deposits. That leads to my question. Is it possible with all the QEs over the last 15, 20 years, seems like we've had quite a few quantitative easings. My question is it possible that there is so much money by the Fed infused by the Fed into the economy, it doesn't matter how high they go interest rates, it's going to lead to stagflation. Isn't stagflation simultaneously where you have inflation and a recession at the same time?
And high employment, yeah. Well, let me show you something. When you see this, folks, it's going to blow your minds, man. I'm so glad you called about this, Jose. So I'm lucky that I have a Bloomberg, okay? But when you see this chart, man, you're not going to believe it. And the ironic part about this, folks, okay? So this is the M1 chart. This is live, folks, okay? This is, let me put this up for you first so you can see it. Okay. Oops, 1 second, FED. Still got it? Oh, I just missed it. Okay, hold on 1 second. I'll get it again. 1 second.
Yeah, while you're doing that, I want you to answer the question, do you think there is so much money infused with QEs over the years that it doesn't matter what the Fed does? They're in big trouble now because M1 has exploded. I mean, it's
well, when
a
you
lot
see
of
this
people
chart,
are sitting on cash.
Yeah, no. When you see this chart, it's going to be a mind blower. But I want to explain the second part of it. Okay. Oh my God. M1. Okay. I never should have. Okay. Here we go. Right here. Okay. Okay, now I'm going to put a chart up. Look at this chart. So, here, I'll put this back. This is a monthly chart, folks, and you're going to see that in March of 2020, this is the beginning of the pandemic, right? You see this thing? This went from 500 or 5,000. Now this is going to be 5,000 billions, right? Up to, what is this? 200? No, 20,039. Here, watch. I'm going to put this back further so you can really see how this works. Okay. I'll put it back 30 years, right? And you're going to see that's the explosion. That's the explosion of money, okay? So that's what the Fed's trying to drain. Now, listen, isn't that a crazy chart, man? I mean, it's hard to comprehend. Okay, that being said, the way this works, that as they're trying to drain reserves out of the system, okay, is so picture this. And this is why you see the banks pulling back even when we have interest rates higher. Because what happens is this, folks, okay, picture this. You know, we all know you get a balance sheet, right? You get, two sides of the balance sheet. Well, the way the regulation works, okay, is that this is the banking regulation, and this is anyone that has to actually mark to market, is that even though the bank, now the banks this time are not sitting on mortgage-backed securities, okay? The banks this time, however, are sitting on a huge amount of bonds and notes, okay? So what happens, folks, is this, is that those bonds and notes that they're sitting on, particularly the bonds, they have to mark that to market, and because the bonds have got croaked so dramatically, right? That is stopping them from being as strong as they actually should be, even though if they just wait till, expiration, the bottom line is that, but they might have bought them at 150 and they'll get $100 back, but they'll get that, interest the whole time. My point is this, that is how it gets drained, because the banks actually have less money than we think they do because of that loss that they have. That means that they can lend less money out, and, somehow this will get drained, But let me tell you, when you look at this, this is what? That's 3 times the amount that's normally there. Now, this is really cool, the way you look at this, because look at this. When you look at this, folks, okay, you can see that this QE has been going on forever. It really started big in 2007. See that? See that line just keeps going up, 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 and then exploded. So.
2007.
Yeah.
Yeah, that's about right, because that's when they came to the rescue, so to speak.
That's right.
So when the Fed releases prints digitizes the U.S. dollar, counterfeits the U.S. dollar, pick your poison. They buy bonds, they print money, buy bonds, causing the price of bonds to go up, yields to go down, because Donald Trump wanted a 12 GDP, and he accommodated Donald Trump for 4 years in his reign of terror. That's how I see it. I don't think you agree with that, but it seems like Trump really put pressure on Powell to keep rates low, and he should have been raising when, doing the opposite.
Yeah, no, I don't see it that way, but, I see, I mean, since you and I have been in the market, let's picture, we're, whether it's 85, 90, whatever that is, we've been in a QE market forever. I mean, you had everyone had the put, right? The Bernanke put, the Greenspan put, the Powell, that was, COVID. So, the bottom line is that I just see that somehow, I'm really glad you called, because I haven't pulled this chart up. When I just said you want M1, I'm looking at, I thought I was seeing things first, man. And I'm saying, what? I mean, that's insane, folks. That was unbelievable.
Well, look, it's not a crazy hypothesis that the Fed has infused so much money into the economy that it's going to take a lot longer than people think to get things back to normal.
I do, and I think what people are not understanding is that it takes a long time just for people to start going broke. You do everything and anything, whether it's credit cards, whether it's your home, and, my take is that it's happening right now. And I think it's going to get a lot worse, And we'll see where it goes, man. I mean, you know, the bottom line is that that chart says it all, man. I mean, you know, the chart says it all, folks, is that if you wonder why things got more expensive, well, this is like, you know, the classic, you know, I'm not quite sure what grade we learned it in, but this is the classic supply and demand, man. If there's all these dollars out here and there's no more stuff.
What grade? I would say third grade, because a third grader could figure this out. You put this much money into the system, it's going to take a long time to get through and get the excesses out of the system.
That's right. So what nun did you have in the third grade?
I didn't have a nun. I had Mrs. Sandulis. What a great teacher.
I love it. I love it. Okay, man. Have a great one and safe one. Thanks, man.
Thank you.
Okay, bye-bye.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I want to thank our Tiger Jimmy in the den here. Man, we're going to go through this because this is bizarre. So he was just saying that, take a look at the M2 chart. So this is what happens, folks. So the M2, the way M2 works, okay, is that you do have the cash and the checking, but it's called near money, okay? So near money, what ends up happening there, it turns into savings and time deposits, okay? And money markets, okay? If you remember 2007, one of them busted the buck. Now, this is only from 1998. This was a straight move up, man. Okay, let's put this on. Here's 30 years. You can see what's happening, man. I mean, you can see why people are just so like, I mean, are you kidding me? What blows my mind here is that why isn't gold like at $5,000? Because I can see this as like, let me put it on this in 50 years. This is crazy, man. So here you go, man. I mean, you go back, yeah. I mean, this is hard to comprehend, man. The bottom line is that you can see this, this paper has not stopped. That's the bottom line, in a monster way. That is pretty intense. No two ways about it. Let's go to Ray in Sarasota. Ray, what's going on, brother?
Well, I have some questions for you regarding Yamana Gold. I have a significant position. I've got call options that I've sold against a good portion of the position, and they're January 6 calls and 7 calls, and April 6 calls and 7 calls. And I'm wondering if I should be taking some bread off the table here, because I've got a profit in most all of the shares I own. And I'm even up on most of the call options.
Okay, so
what do I do? Because of
I would
the Unico and the Pan American Silver deal.
Yeah, no, I would. Because
take some off.
Yeah, and the reason I'm telling you to take some off, not because of the deal, but you can see, Yamana, just went from 6 weeks from 404 to 585. You set up right. Do you know what I mean? And right now, I know, right? I read the gold report, but man, I'm a little bearish on these stocks, man. I am. I think we're going to take a little hit, and we know how it is in the gold market. You take a hit, like we can get on 20 and 30% about a heartbeat, folks. I mean, this could have a nominal retracement and get down, 533, but 50 cents on the stock's a lot, man. Do you know what I mean?
Yeah. Are we going to have to see the dollar weaken before we get a retracement thereafter then, or how's that going to go? In other words, I know gold can be somewhat seasonal.
Yeah, my take is that, it's seasonal, but my take is always about the dollar. So, what you have here is that, yes, and the dollar looks to me, it's down 325 today. It's near its lows, but the way the broad market's trading, the correlation is direct. And it's like, okay, why can't the market get any traction out here when, the dollar was down a little yesterday, down today? You're only up 28 points in the S&P, and this is a market that, should be up a lot more than 28 points. So when I look at that, it's like, okay, man, and what I don't like more than anything is that when we were pulling back, right, the gold stocks were holding up well, right? And we had the streak. You know it if you're in it. I mean, for 6 weeks in a row, folks, it was a little money machine, okay? And when they stay at those highs and the market wants lower price, it's like, it's only going to be a matter of when they throw everything out, man, so.
Yeah. All right. Hey, thanks for your point of view, Tom.
Okay, man. Have a great one. Have a safe one.
You too.
That M1 and M2, folks, okay, that is something else, man. I mean, that is, you can see, no doubt, how and why this inflation went right through the roof, okay? Now, I'm going to pull up M3. Let me just see what the heck. M3. They got it. Here's another index. Let's see what this is look like. Oh, this is all over the place. So let me see. So M3. Okay, so that includes M2 deposits, institutional money markets, short-term. This includes repos also. That's why you see this back and forth like this. Okay, I got to do this. This is overnight money. That's a repo, folks. Almost overnight money at the banks. Let me just pull this. This is probably not going to fluctuate that much. Yeah, it's not. You can see. Look at this though. This is interesting. It pops up. It comes down hard. When is that? Oh, look at that. Oh, I wonder if they even get it anymore. That's interesting. See what's going on? This stops at, maybe this is over. This stopped, my chart here stops at 2006. I'm not sure. Anyway, M1 and M2 should tell us quite a bit. And, and that's the classic. So here's the classic with inflation, folks, okay? When you take a look at markets, okay, let's just say that we have a little city, and you have 10 houses in a city, right? And you have one supermarket, right? And there's 100 of us, okay? Let's say it's 15 of us. No, it's 20 of us. There's 2 people in a house, right? Okay, so we have 10. We have a supermarket. And to start out with, each of us has $1,000, right? Okay, so as we're buying either houses or, groceries, right? The bottom line is that $1,000 is getting circulated because it's the velocity of cash that gets circulated also. Well, guess what? When there's only that, the bottom line is that everyone's going to only pay so much for everything, right? Now this picture, I thought, okay, we saw what that was. That was a 4-fold acceleration. So here's a 10,000. Now all of a sudden, Ben Bernanke came in with his helicopter, dropped 30 more thousand. So now we each have 40,000. No, 4,000. What do you think is going to happen? Bottom line, exactly what happened to the economy. Exactly. Yeah. It's pretty cool, that when you kind of look at this, like, it's a cut and dry deal, man. I mean, the bottom line is that there's more money chasing less goods. And, that is what inflation is. So we'll see where this shakes out. Because, I've mentioned this before. What is going to happen, okay, like when Jose was talking about it's going to take a long time to get that money out of the economy. It is. But check this out, man. That the last bill that went through, okay, that's going out to the cities and states hasn't even filtered down yet. I know that for a fact because I'm going to be going after it in the city of St. Petersburg for infrastructure for where I'm building, okay? Not for me personally, for the whole neighborhood. There's going to be huge amounts of infrastructure money, but guess what? That filters into the economy also, and that's, the good thing about that is that will be jobs extraordinaire. There's no doubt about that, okay? Because whether you're talking street lights, cleaning up, gutters, alleys, all that will generate jobs. But it's still a huge amount of money, and that huge amount of money is in the grant aspect. That's the bottom line. Neighborhoods might have to come up with a certain amount of money, but the other side of that is that's going to be, it's going to do neighborhoods over. That's the bottom line. So we'll see where this whole thing shakes out. But what the mind blower here is now. Actually, when we really think about it, it's like, why or how is the dollar even that high when? Well, I'm going to answer my own question. You know why? Because if we thought I'm going to hunt this tonight. If we get a hunt, I'll turn this in the break right now. I'm going to hunt other countries, whatever they call their M1 and M2. Because even though ours is like this, theirs might be like this. Because evidently, the dollar is the best fiat currency as fiat currencies go. Dow Industrials right now up 125, Nasdaq's up 138, S&P's up 25. Stay right there, folks. Come right back.
The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now trading up 116, Nasdaq up 115, S&P's up 23, and we get a couple questions here. So one of them is that, how much can they drain the big banks before? Are they worse off than QE before they start? I don't know. I mean, it's not. I don't know. What I do know is that the bond question is going to be a big one inside them. The reason being is that, here. So if we look at this for a second, watch how this works. Okay. So if we do, even 10 years. I mean, you can do a 10-year, and I don't know 10-year. Let me see. I'll do the 10-year generic just so you can see how this works. So we put this up. T1. There it is. Okay, so if we take a look at this, you're going to see right now the 10 years at 114, right? I put this back. Let's just put it back 3 years so we can see last year. So you can see it's been on a one-way trip on the way down. So it doesn't matter when anyone has bought a 10-year, right? You're in a losing position. Now, what does happen is this. So picture this. Like, you're talking about up here at 140, and that was September of 2020, but let's just go get closer. Let's go last year, March of 2021. So March of 2021, a 10-year still cost you $128, or $1,280 for a $1,000 bond. Now, you're going to get interest, but you can see as that markdown happens, that is a monster number, So the bottom line, it's a big deal. And then here's another one, because this is thanks, Mark. Appreciate it, man. We have a banker in the den, and here he's explaining that banks experienced deposit growth of nearly 30% during 2020 and 2021 COVID stimulus era. The liquidity crisis is most likely to occur within the medium to small size institutions that are 100% lent out and are experiencing deposit runoff as savings of the last 2 years a deposit. Oh, this is so cool, man. So you see what he's saying here, man? I get it. Okay. A bank can sell a bond to get liquidity, no matter what the pain of the loss, but they can't force their customers to pay their losses back quicker. Yeah, there's no doubt. Reverse repos taken. Okay, so you get the gist there. So there's two different things. That's a whole other scale. That, during the COVID went up, and then of course we know that a fiat system you get leveraged out, right? And then all of a sudden it's getting sucked out. Bottom line, as it gets sucked out, you get the gist of it. But it's really cool, and we will get into this more because, to me, this is really the nuts and the bolts of really understanding the market, which is really cool, man. Do you know what I'm saying? Because it really is broken down into this. I've talked about it many times. What is our signature worth? That's the bottom line. Because that's how everything runs, man. I mean, if we all had to pay cash, yeah, it wouldn't happen. There's no way, man. Do you know what I mean? Even the large funds that's all they do with cash. Well, guess what? They get that cash from somewhere else, okay? So that's just and most times, just so you can understand how that works, and I do this myself, I pay for cash when I buy them, but then all of a sudden they put mortgages on them. It's quicker to pay for cash because you get a better deal, and then guess what? How many billions or millions do you have, okay? You're going to leverage them out, Now, you don't have to leverage them out, 40, 50%. You can leverage them out 10, 20%, 30%, whatever you want to leverage them out for. But the bottom line is that's how that whole deal runs. So let's go over to Tesla, because Tesla, he's going to have some... So picture this. This is blowing my mind. I don't know how. I always ran those ads, okay, the mortgage ads. I was paying 7%, right, on the mortgage, but it was fully secured. And let's say the place is worth $500,000. Yeah, if I get $300,000, they have $200,000 in equity. Okay, that's how that worked, right? Now, listen to this. And let me tell you something. 7% is... I felt it was a good rate, but that's still a lot of money to pay on money, period. Like, when people are paying 10, 12, 30, I don't even know how they do it. That's the reality. And Musk is paying 11.4% on $12 billion. Yeah. Twitter's bill just on that is over $1 billion a year. So what the game is here now, what he's trying to pull off, is he's trying to... And this is going to get interesting, because what's happening is that the banks that are basically holding this, they were hoping to move this out, and they haven't been able to move it out. So the banks may go along with this, okay? Yeah, let me see if I can pull this up. Okay, so Musk's bank is considering replacing some of the high-interest debt he laid on Twitter with new margin loans backed by Tesla. So, okay, so he has $13 billion in debt right now that he's laying out. They haven't been able to sell it. Let me see. Yeah, there it is right there. He's paying 11.75%. 11.75% on $13 billion. It's like, really? And so he's going to pay more interest than Twitter ever even took in, just so you understand how that goes. So what the deal is, what he's trying to pull off now, and I don't think the banks are going to go for it, okay? Because what he's trying to pull off is that he's trying to pull off a mortgage loan on Twitter shares so that he can bring that down. Now, when looking at the, Tesla chart, it's like, okay, we have some support here at 166. It breaks 166, man, you're in trouble. 119's next. And then you're talking about all the way down here at this $64. So the question there is that, thank you, Duffy. Okay, so check this out. That's, that number, right, is that the interest, what I just read here, the interest, folks, if you're not in the Tiger's Den, it's $1 a year, man. Get in it. I learned so much today out of the Tiger's Den, it's insane, okay? And it's awesome, man. That's the bottom line. If you really want to be educated, you really want to understand how markets move, I'm telling you, man, just get over there. So picture this. That number's insane. The interest per year is $1.53 billion. And Twitter's never taken in $1 billion. There you go, man. I mean, this might have, hey, we'll find out where this shakes out, but that's about as intense as you get, And it has always blown my mind how, takeover funds, they do pay that type of interest. But what happens there, folks, is that they pay that type of interest for 3 or 4 months, and that's it. Not, this could, if he can't figure that out, he's into this for a huge amount of time, huge amount of money, and my take is that Tesla's going south. I don't know what's going to happen with Twitter, but Tesla's going south. Dow Industrials right now. Oh, hey, don't forget about the Tiger Dollar sale, too. We got a Tiger Dollar sale going on right now. You come over to our website at TFNN. We only do this twice a year. You only get a few more days to do it. You can buy $500, and we give you another $100 at 20%. You get $600, so you make 20%. You can buy $1,000, and you get $1,300, 30%. And the max is you can buy 1,500 and get 2,100. Make 40% on your money. Stay right there, folks. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Let's go to our man Keith in Cedar Rapids. Hey, Keith, what's going on? Oh, he's gone. Okay, so he wanted to look at the Dow Industrials, right? Bottom line is that Dow Industrials, that has been the strongest indice, no doubt about that. That being said, guess what? Bottom line, you're already inside the 34,481. Bottom line, you got outside of it, gave it up. This looks bad. Another ABC down too. Your 8 point on this is almost 35,000, 34. Oh no, 34.5. So the screens are so far away from me. 34.5, 34,500. So it's a 1,900 A to B. Let's call it 2,000. That gets you 31,800 or something. Yeah, my take is that these ABC structures on the way down, we're going to see, folks, sooner rather than later too. I mean, in a monster way too. Because you got to remember something. What's happening here now? Yeah, let's go look at the volumes, see if they've stayed light. So the SPY, you get 50 million, and you're coming into 77 with. Now, see what's interesting here. Remember, I started this earlier, so this could go a little bit higher. You see how the SPY is actually over yesterday's high, and it was under it when we were talking. So you don't have a failure there. So And that's not saying it's not going to be an ABC down, but it would have been easier if you closed under 395.64. The Qs were never there. But my take is that we got an ABC structure down. I'd be setting this thing up, man. And what's today? Today's Thursday? Today's Thursday? Yeah, Thursday, right? So maybe you go a little bit higher tomorrow. Yeah, I could probably see that. But this is an ABC down. It's a setup for an ABC down. Let's put it that way. When you come down with volume, you go back up with volume, particularly when you're inside a much larger ABC down, which we are. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.
Building